I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist at institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, hi, Jim.
Theresa May, the Prime Minister of England, getting a bit of a shock. The polls going into the British election showed she was heavily favored, but she ends up with a minority government. What happened there, Bob?
Well, I was watching it, and you could, in the last few weeks, you could more or less see the tide turning against her and for the left. And I've had a theory for a long time, is that when you're in a boom, and we are in a financial boom globally, stocks and bonds up, that sort of stuff, and business activity, is that when you're in a boom, everybody gets active, including, and it all sums up to one huge boom, and including the left on the political spectrum, who, live or die according to winning an election. But so you see that in October, financial markets were declining, particularly the stock market was declining, and then the left seems to get less busy or less inspired. And this is, Jim, it's a really rough theory, and that allowed in the States the reform movement to win an important election. So, and then since then, you've had the boom is back on, and this time it's including some pretty good economic numbers in the States and in Canada, and so again the left gets inspired. And I didn't have any predictions on the British election, but definitely the leader, last name is May, Prime Minister May, did not make a good call and wasn't aware that we're in a volatile market for financials and obviously a volatile market for elections. And of course in British Columbia we had the same thing. The incumbent party reduced to a bare minority that has yet to be settled, and it was, to my eye, just a sudden surge of activism amongst the left, and it's putting the province in a very strange shape because there are major hydroelectric power projects underway, and three radical Greens are a hinge in the equation in the legislature, and they would just shut it all down. So it'll be interesting. But to get back to the market side here now is that you have the surge that started with most people lay it on to Trump, but things were soft into October, and often whatever's problem the market sees can clear in October or November, and then our technical work on November the 3rd got a springboard buy, which is a technical thing that comes in only, it's designed to work and give you buy the dip opportunities in a flat to rising general stock market. So it gave the buy, and then soon everybody saw the reason, which was the apparent reason, which was the Trump win, and the most pro-business in generations, administration came in, and the most anti-business administration in the American history was going out. So, but it's also part of a pulse around the world, because you've had the London stock market up, you've got the European stock market up, you've got Hong Kong is up. The one that peaked early was the China with the SSEC a couple of months ago, with enough technical dynamics to say that that move had probably run its best. And what we're having now is that we're getting technical excess signals in London and in the Stocks 50. That's the representative stock group for Europe. So, and then the other one we want to back up a bit was that when we got the buy in November, you look out and say, okay, seasonal stuff, we can see that after November, industrial commodities would rally likely out to March, that sort of thing. And so we had a target of the good stuff through to March. And a number of industrial commodities such as crude oil and base metals, I think peaked in late February, good enough. And then in April, we got another one of those springboard buys on that decline. So we figured, okay, this one will carry out to the usual good times completion in May, June. So, so this we have. And going back, way back in history with the advent of great financial manias, the first one was the South Sea bubble in 1720. And there has been, 1929 was number 5, and 2007 was number 6, so we've had many bubbles. And in Europe, the tendency has been that the mania would blow out in May or June. And then when New York became a big enough market to become important, the first bubble participation there was in 1873. So you had Europe and England completed their bull market in May and June, and New York went on and had another exciting rush into early September, and then rolled over into a crash. And then, of course, the same thing in 1929. Europe and London had their highs in May, and then New York had the high in early September, and then the crash. And, of course, in 2007 bubble, they managed to keep the bubble going until October. So, but anyways, we have exceptionally dynamic markets, very high at a time when a high was probable. So we look at the seasonals, and what can you have in the fall? You can have discouraging markets. And the one thing that, if you want to hang your hat on one item, would be that you have a tendency for credit markets to do an important change in June from positive to adverse. And if you have been very positive, which we have been, then the transition to adversity is a little more distinct. So at the moment, the action in low-grade bonds, junk, high yield, is still positive, but it is generating some technical signals that are very concerning. And then even looking at a European index on a number of defaults in lower grade stuff, and it has been very positive with the party, but it is generating some technical excesses. So here's the way we look at it simply. Is it up when it should be? Yeah, we sort of had around June as a target. The next point is, are there signs of speculation? Oh yeah, this has got sentiment and momentum items at levels only seen at or near important stock market highs. So with this, to get back to our original question about politics, is that if this is the best for the financial markets, it may be the best for the left in the political spectrum. And the sooner it gets over, the better. And even in 1920, for example, which was a huge speculative bubble in commodities around the world, and you had the communists come in Russia, and they were practicing pure communism. And then the 1921 crash in commodities was brutal. And then in Russia, they kind of, communism isn't working so well, so they sort of shifted over to some kind of bogus socialism. And in the United States, during the teens, it was a great experiment going on then in leftist politics, and President Wilson had been nationalizing railroads for the public good and things like that. And then all of a sudden, everything deflated in 1921, and such that in the boom towards 1929, one of the leading spokesmen, John Moody of Moody's credit rating, he said that the reason why the bull market would continue is that there were no longer leftist policies being imposed, and in Europe they were getting away from socialism, so there'd be all kinds of consumers. Well, we've seen that as well. So we could see a deflation of the financial boom, and we can see a deflation of the energy that the intrusive left seems to have these days.
We'll have more with Bob Hoye right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Bob Hoye. Bob, there was even more to what you've been talking about, how social changes are connected to the stock markets.
Yeah, the 1980s was a period of restlessness. You had a huge commodity peak in 1980, and then you went into the deflationary period, and that's when many folks in Eastern European countries that were communist began to get a little restless. They were looking at how good the lives of the governing classes were. They were living the good times, and the ordinary folks weren't. So then there was a high for commodities in 89, 88, and of course at the end in 89 was suddenly the restlessness brewed up into a movement that the symbol was where they took down the Berlin Wall, and the next step was the end of communism. So the big political change away from intrusive government happened after an important high in commodities. So, and which was a form of boom. And here now we haven't had much excitement in commodities since 2011, when crude oil got up to 147. But you've had a boom, and this rough theory is that as this financial boom rolls over, probably the ambitious left will begin to lose their persuasive abilities. So it's fascinating to watch for.
Aren't revolutions usually started, though, when people really feel things can't get any worse, so we might as well revolt?
Oh, yeah. It's a popular dissatisfaction that prompts a popular uprising. And they've been happening, or tracing all the way back to ancient Egypt and some of them have prompted regime changes, as I mentioned, the collapse of communism, and but then they can turn nasty if you have the dissatisfaction and the revolution in the period when prices are rising. And the two examples there, the French Revolution in the late 1790s, where there was popular dissatisfaction, and then the uprising ended up being taken over by a bunch of neurotic intellectuals who sensed that everything had to be run and controlled. And so that turned into a reign of terror. And then the next of that type of revolution was the Russian Revolution. That was again in a period of rising prices and tensions and popular uprising, and the neurotic intellectuals took over it and turned it into a reign of terror. And let me define a neurotic intellectual. I got no problem with intellectuals. Let them think what they want. The problem becomes is when they get involved in politics and start imposing their personal ideas on society. And as we've seen a number of examples, they end up with a bloodthirsty reign of terror, and let's avoid that at all costs. And the agitation for the last 8 years or so of Obama administration was intellectuals with ideas about managing the economy and managing the climate, getting control of things. And it's more controlling people than the issues, like, for example, the idea that a committee can manage the temperature of the earth is the most far-fetched story ever in history.
We'll have more with Bob Hoye right after this.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Bob Hoye. Bob, gold is down quite a bit today, silver dropping, and also the Nasdaq down. Are these signs of anything in particular, or is it just part of the regular stuff?
They could be. One of the things with the excitement in the financial markets over the last few months has been the weakening U.S. dollar. Don't ask me why. But anyways, now the U.S. dollar, we had 96.5 on the DX as being a probable low, and also that perhaps it would hold. Well, it did hold and became support, and then just recently got a excess of, reached an excess on the way down. So we were looking for a rally in the U.S. dollar, and this we had a couple of good days here, and of course this is going to set back gold and silver. Gold had we had commodities, industrial commodities like crude oil and base metals had a high read at the first of the year, or early in, and then have been declining while the U.S. dollar was declining, which shows weakness. And of course, gold was the best one. It did rally against the weakening dollar. Silver didn't do so well because the gold-silver ratio was going in opposite to silver, or to silver's disadvantage. Now, here's the other thing, is that if the gold-silver ratio goes up, it's beginning to signal a developing credit crisis. So we've got junk bonds, spreads, everything very, very bid up at a time when it's starting to change. So this last couple of days of the firming U.S. dollar seems on schedule. It has moved from a technical excess, and it's probably the first step in a major turn and strength in the U.S. dollar. This is pretty exciting stuff. And then this makes whatever commodities were strong with the weak dollar weak. So gold will probably sell off. Then silver wasn't very impressive when the dollar was weaker. What is silver going to do when the dollar strengthens? I think it's going to get hit fairly hard. So, yeah, and then on the Nasdaq side, you've had some tech stocks, and the big leaders, the FANGs, as they call them, Google and Netflix and all those things, are really reaching excesses as well. So I think the next few weeks in the financial markets are going to be very exciting.
Bob, thank you so much for chatting with us.
Jim, good to be with you.
Have a great weekend.
Yeah.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. If you have any questions for our guests or for the show, you can email us at info@HowStreet.com. Check out our YouTube channel, Talk Digital Network. Find us on Twitter at TalkDigitalNet. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.